Okay, guys. So yesterday we discussed a few theory points, right? So valuation is a subjective concept. Valuation doing at point of time. Prices differ from value and purpose of valuation. Methods also we discussed, but we are not discussed detailingly. Just we learned names. Guys, clear? So methods are not direct names. They classified based on the approaches. Based on market approach, we have a three methods: market price method, market company comparable multiples. I am not use the word market, don't worry, that is called company comparable multiples, so not a problem. Next, company comparable transaction method. I used a few small examples to understand that names also. Next, when come to the based on income approach, again we have a two methods: discounted cash flow method, earning capitalization method. When it come to the cost approach, cost replacement method and cost reproduction method. Apart from that approaches, some specific methods is there: net assets method, goodwill valuation, economic value added and market value added. Okay, then fine. Right now. For 2 days, please write. 2 days. So when it come to the next discussion, valuation, what sir? Confirmation. Confirm, you don't need to write. Okay. Valuation is a multidisciplinary in nature. Can anyone tell me the meaning of multidisciplinary? Multidisciplinary. Multidisciplinary. If there is a three or more topics are involved for one discussion, that is called multidisciplinary in nature. Sir, clear, sir? If you want to do valuation, you have to learn lot of subjects. First, you need to understand business environment. Business environment. So what is the mean for business environment represent? You need to figure out nature of the business, size of the business, what kind of product they are doing operations. They are doing a product related operations or service related operations. Those things you have to figure out first. That is we learning under SPM chapter, SPM subject. Next, financial framework. The next point we have to consider, next subject we need to learn financial framework. Can anyone tell me what is the purpose of financial reporting for valuation? When you're doing a valuation, you need figures or amounts, na? Where you are procure that? The data you are taking from P&L account, balance sheet. That is the purpose. You need to learn the chapter of financial framework. That is a subject name called CFR. Next, present value and future value calculations. Present value, future value calculation is needed. One of the method we discussed, discounted cash flow method. What we are doing under discounted cash flow method? Bringing future economic benefit into present value. For the purpose, you need to learn FM. Next, legal issues. Legal issues. We can't value based on personal information. We need to do valuation based on guidelines of court. Yes or no, sir? For that purpose, you need to learn law before doing a valuation. That is the topics covered under SEBI Act, FEMA. That are the acts are relating to valuation only. Next, when it comes to spreadsheets. Can anyone know the meaning of spreadsheets? Spreadsheets. Max. If you're doing max in apps or software, that is called spreadsheets. Without doing calculation, we will not get ultimate value, no? If you want to do valuation, you need to pro or excel at these all subjects. SPM, CFR, FM, law, max. Because of this reason, they're using a name called multidisciplinary in nature. Sir, clear, sir? So why I'm using these concepts all means just for MCQ purpose. These all are not using in calculations. This all just for the purpose of MCQ solutions. Are you okay? Okay, then fine. The next concept, valuation premise. The next concept name is valuation premise. So for example, in Shikhara, I think one or two times we planned a cricket. Yes or no, no? If they announce a cricket match, we will draw a blueprint, na? These are the teams. This is the 11 players. Out of 11, these are the openers, bowlers. We will create a blueprint, na? The same thing when you're doing a valuation, you need to create a blueprint first. How to value, when to value. Hope you guys clear. The entire blueprint creation is known as valuation premise. When it comes to creation of blueprint, you need to consider few points. Point 1, fundamental basis and assumptions. Without assumptions, we can't do valuation, Nana. Without assumption, we can't do valuation. I think in accounts, there is a basic assumptions. What is the basic assumptions of accounts? Accrual, going concern, consistency. Guys, clear? What information you are procuring for the valuation? Financial information only, na? The same assumptions you need to follow when you're doing a valuation. Hope you guys clear? Next. Principles. Some ethical principles will be there, some unethical principles will be there. We need to consider doing a valuation. Next, the third point, conditions. And the fourth point, concepts. This concepts is nothing but methods what we are using. You already know the methods list. What are the methods we have, Nana? Market price method, company comparable multiples, company comparable transaction, discounted cash flow method, earning capitalization, cost replacement, cost reproduction. Clear now? Now the conditions is nothing but fundamental basis assumptions and principles. I will explain about the principles also. Wait a moment. Sir, clear, sir? First thing, do you understand the fundamental basis or assumptions? Please tell me the fundamental basis or assumptions what we have already. The first one, going concern. What is the mean for going concern, Nana? What are the asset, what are the company I purchased, I am not sell immediately, I will continue some feasible future. Yes or no? Next, Nana, consistency. What about the consistency, Nana? What are the framework, financial framework I followed this year, I will continue for next year further also. That is a concept set by consistency. Next, accrual. What is the mean for accrual assumption? I am not writing any transaction after received or paid. I am receiving a transaction when it occurs. That is a concept we are using basically. We are considering received, receivable, paid and payable. In definition point of view, we are not recording transaction receipt and payment time. We are recording a transaction happens time. That is a concept set by accrual. Are you guys clear? Okay, then fine. Next assumption, discount rate is appropriate. What is the discount rate we are using in capital budgeting of FM? What is the discounting rate we are using in capital budgeting? Cost of capital. Cost of capital. I will give clarity. The definition of cost of capital says that it is a minimum rate of return company need to earn to meet expectation of a investor. Nana, clear, Nana? So minimum, what are the rate we are procuring funds? That must be we need to earn first. If you earn more than that rate, what happen? Profit. But minimum what you need to earn, Nana? Expectation, na? That expectation is nothing but cost of capital. Sir, clear, sir? So if you want to do discounting, you are bringing future economic benefit to zero period, you need to use appropriate cost of capital rate. Sir, clear, sir? They will give, sir. We are not doing anything. If they not give directly KO, they will give KE, KD weights information. Based on that, we can figure out the KO. Are you guys clear? But the basic assumption we followed, what are the rate we are using for the discounting? That is a appropriate rate. Next, Nana. Stable economic conditions in the industry or country, Nana. What does it mean for stable economy? What is a stable economy? Now you learned a concept name called recession, boom, expansion, contraction. What does it mean for recession? If your country economy impacts negatively due to different reasons, that is called positive economy or negative economy? Negative. Yes or no? No. But when you are doing a valuation, we are taking an assumption there is a positiveness in the country. Hope you guys clear? Practically it not works. That's why we used a name called what, Nana? Assumption. Sir, clear, sir? So these are the basic assumptions we are followed doing the valuation. Okay, then fine. When it comes to the principles, Nana, substitution. What does it mean for substitution as of your knowledge? Or link that point to valuation. Nana, I want one iPhone, iPhone 15. I have a two options. Sir, clear, sir? I have a two options. Not exchange. I have a two options. Two sellers are there in the market. Second hand sellers. Okay. One person name is X, another person name is Y. Same battery. First in iPhone users, they will check battery life. Guys, clear? Next they will check repairs any happen. Or next point they will check number of owners, single owner or multiple owners. Okay, all conditions are satisfied by both. Clear? Now one X says that the price is 55,000, Y says that 56,000. Where you buy 55 or 56? Why? Because there is a substitution in the market. There is a substitution in the market. Guys, clear now? If there is a substitution, seller will think, if I get that asset for a lesser value, why I need to pay more for you? Nana, clear Nana? That is a principle they followed. Not only valuation, you are also followed the same principles. Yes or no? Na? Next, Nana. Fair market value. So what's the next point, Nana? Fair market value. Do you do transaction for fair market value or other than fair market value? That is the point you learned, arm's length transaction. Yes or no, sir? So if you want to purchase an asset or a company, are you pay fair market value or more than fair market value? This kind of principles we are followed. Sir, clear, sir? These are just theory stuff. That's it. Okay. This entire topic is known as what, Nana? Valuation premise. If you want, write that point also. Valuation premise is nothing but blueprint for valuation. Sir, clear, sir? So after considering all those things, you consider methods also. So by using method, you are calculating by considering principles and assumptions. Then that is called what value, Nana? Fair market value. Are you okay? Then fine. So this is about theory content in first chapter in business valuation. The next, Nana, problematic portion. First you have to learn cost of capital chapter. Next, capital structure. Next, financial analysis. Next, time value of money. Next, capital budgeting. On this capital budgeting also just NPV, Nana. What's the full form for NPV? Net present value. I hope you are the best in these all chapters. What is the mean for financial analysis, Nana? Ratio analysis. Exactly. Nana, clear, Nana? I think in new syllabus they added two more concepts. Common size statement analysis, comparative statement analysis. Previously we have only one concept, that is called ratio analysis. Now new syllabus they added comparative statement analysis and common size statement analysis. And another topic is the trend analysis. Guys, clear? I will cover this all concepts in chapter 1, Nana. What about our chapter 1? SPM. Sir, clear, sir? Next, Nana. Without late, I want to start cost of capital. Now tell me the meaning of cost of capital. Definition. Just 5 minutes back only I said. It is a minimum rate of return or maximum rate of return. Minimum. Same definition we are using for IRR and ARR. In ARR, what we are using means it is a maximum accounting rate of return company need to earn. Accounting rate of return. When it comes to the IRR, it is a maximum rate of return company need to earn. There is a difference is there for ARR and IRR. In ARR, we are using accounting information. In IRR, we are using cash information, cash flow information. Sir, clear, sir? There is no discussion of ARR and IRR. Here is a discussion of a cost of capital. Why? Because there is a method, main method is there in our topic. There is a topic name called a discounted cash flow method. For the discounted cash flow method, the mandatory thing is KO. For KO purpose, you need to learn cost of capital chapter. So what you said, Nana? It is a minimum rate of return company earn to meet expectation of whom, Nana? You and me, huh? Expectation of investors. Now tell me investor definition. Equity shareholder, preference shareholder, debenture holder, banks are private institutions. Banks are private institutions. Each and every point you need to see in company point of view only, not on investor point of view. Nana, clear, Nana? Why? Because what are the calculation we are doing, that is a return for investor, cost for company. Are you clear? Okay, then fine. See this example, you will get clarity. Company require 100 crore rupees of funds, Nana. When it comes to the market, we have a multiple options. Angel funding, startup rising, in reality. But these are the outstanding topics we are learning from past days onwards. When it comes to the cost of capital, they says we have 5 sources of funds. Can anyone tell me the 5 sources? You can procure with help of selling of your security, that is called equity share capital. You can procure with help of selling of debenture document, that is called debt debenture. You can procure money with help of selling of security name called preference shares. You can procure money with help of selling of, not selling, mortgage of your document, that is called bank loan or term loan. Are you guys clear? Next, 5th point here you need to check, that is a new company or existing company. If it is a new company, there is a no savings. If there is an existing company, there is a reserves, that is called retained earnings. These are the 5 sources we have. Equity share capital, preference share capital, debenture, term loan or bank loan, retained earnings. You can use a reserves and surplus also, not a problem. Are you okay? Okay, then fine. I called to Sumant, sir, I have this business idea. Business required 100 crore rupees. You have any interest to invest in my company? Please tell me about how much you invest. He said that, sir, idea is good. There is a future for this business. I am ready to invest 20 CR. He will invest at free of cost, or you will expect something, Nana? Something. What he expects me. I asked, what is your expectation? Sir, I want ownership. I want what, sir? Ownership. Sir, clearer, sir. I said, for this 20 CR, I will give 5% of ownership. Sir, clearer, sir. He said no. He said no. Sir, for 5% of the 20 crore is not a good deal, sir. Then I said, I will give 10%. Then he agreed. Sir, clearer, sir. Now I procured 20 CR with help of selling equity shares. Nana, clearer, Nana? Now equity shares selling means what I am selling? My company ownership. It is not a document. It is a ownership. Sir, clearer, sir? Then now he was a owner of my company. Every year what he expects? He expects profit. Here we are not using a word called profit. Here we are using a name called dividend. Nana, clearer, Nana? The expectation name is called equity dividend. Sir, clear, sir? Now that equity dividend denoted with KE, Nana. The equity dividend denoted with what, ma? KE. Now we have to compute how much he was expecting per annum. Are you okay? Next, out of 100, we procured how much, Nana? 20. Pending 80 is there. I call to your call, Ramesh. I said same about the business idea. He also happy. So what your expectation? I asked. He said, I want ownership, sir. I said no now. I said no. Why? Why? If I sell my ownership once again, they are the owners, not me. Yes or no, sir? That's why in counter I give an offer, sir, I will give one security. On that security, I will write these conditions. Condition number 1, you are not a true owner. You are not a true owner, but I will treat you as a owner. Sir, hope you guys understand the point clearly. You are not a true owner. I will treat as a owner. I will give profit share. I will give profit share. But one condition, I can't give irrespective of profits. I will give if there is a profits. Before sharing to my true owners, I will give preference to you. Sir, clear, sir? That security name is called preference share capital, Nana. Guys, clear? So in preference share capital, we are not give dividend if there is a losses, Nana. We will give if there is a profits. That too, before sharing to equity shareholders, we need to give a preference to him. Then, adiki arthamainదో ledo okay cheppesinu. Sir, clear, sir? Why? Because he was only thinking about ownership. Ramesh, sorry. He was only thinking about ownership. But I said something, okay, sir. Ultimately, I will give, I get return. Na? Yeah, I promise you will get return. Are you guys clear? Now, selling of what, Nana? Selling of security name is called preference shares. Preference shares. Now, when it come to preference shares, at the end of the year, he will expect something. What, Nana? Preference dividend. He expecting something name called preference dividend means I need to pay, na? That denoted with what, no? KP. Cost of preference share. When it comes to the Ramesh point of view, return. When it comes to the company point of view, cost. Okay, then fine. I call to Nora. No. I call to, what's your name? Hema. I call to Hema. I explained about the concept of business. All okay. Then I asked, I already procured 40 CR. I need extra 60. She said, sir, that much of amount not there in my bank account. I have only 25 to 30 CR in my bank account. Then okay, fine. How much you are ready to invest? She said 20. Sir, clear, sir? Now I asked what your expectation from my company side. She said I need to talk with my parents. Sir, clear, sir? Why? Because the parents are not a risk takers. They are not a risk takers. Then she take 1 day time. After 1 day she calls, sir, I will invest 20 CR in your company. I want debentures. Why debentures? Irrespective of profits, she will get interest. If my company earns or not earns, I need to pay interest. Sir, clear, sir? It's called smart move. Now 20 CR I procured. Selling a document name called what, Nana? Debenture. At the end of the year, what she expects, Nana? Interest. For my company, it is a cost. I need to calculate with name called KD, cost of debenture. Next, Nana. 20 is here. No, 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 no. No, 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 no. I'm not called to anyone. I'm going to bank now. I'm going to bank now. So, okay, I'm going to bank now. Completed. All options are completed. And I called to Nagsai, he not lifted. Ra. Okay, then fine. I went to the bank. I mortgage. What I need to mortgage? My company financials. If you go with your company P&L account balance sheet, they will throw in your face. Ra. Seriously. Financial statement is not a documents to mortgage. Sir, clear, sir. Property papers only you can use to the mortgage. My company located in some good area, the cost worth of 100 CR if I sell now also. That's why not Bogopeta, it's a water. There is a yesterday we discussed Kokapeta. I think in now Kokapeta only high prices ra. 10 na 100 ra. So okay, I mortgaged in a bank. Here I am not selling anything, guys. I am not selling anything. I just what I did na mortgage. If I mortgage, they will give free of cost. They are also expecting something per annum. Na? What they are expecting? Interest. Nana, clear, Nana? Now that I need to calculate as KT. Cost of term loan or cost of bank loan. Next, Nana, pending 20 CR is there. My company is existing company here. We created reserves in past years onwards for future contingency purpose. Now it is a future contingency. I need to do expansion. I am using that resource for my business. 20 crore rupees. Here also I am not selling anything. Here also I am not selling anything. Just what I am doing, I am using. Whom fund it is? Previous owners funds. Are you guys clear now? Now the previous owners also expecting something or they will give free of cost. They are also expecting something. Their expectation also, owner expectation, equity, dividend. Nana, clear, Nana? Now this calculation we are denoted with KR. Are you okay now? Okay, then fine. Now two things you need to learn, Nana. Calculation of specific cost of capital. That is nothing but KE calculation, KB calculation, KD calculation, KT and KR calculation. Second thing you have to do, calculation of overall cost of capital is also be known as weighted average cost of capital. Why that weighted average cost of capital is came? Do you know? What, sir? Average. Why you are doing average, sir? Why you are doing average? If you sum individually, for example, Nana, tell me how much you are expecting? 10%. Preferential who? Ramesh, how much you are expecting? Say, I have not give more than to my owner. Ra. He will expect much means I will cancel his investment. Nana, clear, Nana? One point is there. K is always greater than KP and KD. The reason they are the risk takers. Sir, clear, sir? If company having a losses, who need to bear? Owner need to bear. Ramesh not. Sir, clear, sir? Then why I will give more than my owner? So, okay, 9%. When it come to her, she was a smart move, I said, risk free. Are you give more than these two or less than these two? 8%. So bank also same, interest only 8%. And owners already expected 10%. Some all, Nana? Don't use your brain, use calculator. 45. What does it mean for 45, Nana? If you are no. If you are procuring 100 crore rupees, at the end of the year one, you need to pay 45 crore as a cost. It is practically possible. If it is possible, tell me, I will do that business. Vijay Walia also not do that kind of businesses. You need to. He was the CEO of that factory. If you want any jobs, ask him. He will give. Now, some to our factories also added, I think. Nagarjuna beer factory. Chiranjeevi? Rajshekar? Godela factory. What next? Chiranjeevi beer factory. Nagarjuna beer factory. Next? Chiranjeevi? For that companies only we are procuring this much of money. So if you are paying 45 crore, if you just procured 100 crore as a capital, for that capital you are paying 45 crore as a interest, means I think that is a flashman business. Yes or no, na? Okay, then fine. That is the purpose only. There uses weighted average cost of capital concept, Nana. If you considering individual capital point of view, why? Because the capital what we are procuring it in the proportion. That is the purpose only we are calculating weights. If you sum all weights, you will get one. Weights. The reason behind the one is, I procured 1 rupee, out of that equity how much portion, debt how much portion, term loan how much portion, return earnings how much portion. If you multiply with that weights into specific cost of capitals, you will get accurate figure of payment of cost of capital. Nana, clear, Nana? Okay, then fine. Now first, cost of debenture. Cost of debenture calculation. When it comes to the cost of debenture calculation, as per your law, there is a multiple classification of debentures. But when it comes to the FM, that to cost of debenture calculation, we are considered only two things: redeemable debenture, irredeemable debenture. Irredeemable debenture, redeemable debenture. Can anyone tell me the meaning of this classification? How they classified? For a definite period, if you receiving only interest, redeemable or irredeemable? Irredeemable. For n number of years, you are receiving interest. At the end of the nth year, if you are receiving your capital also, that is called what, Nana? Redeemable debenture. That's it. When it come to this irredeemable debenture, only interest. How many days? How many days? Either company need to close, either you need to die. Sir, clearer, sir? That much of days you will receive only interest. When it come to redeemable debenture, Nana, n number of years interest, at the end of nth year, what you will receive back? What are the amount you invested? She invested 20 CR, na? He will get back the 20 CR also. But when it come to the, if she buys the name called irredeemable document, she will not get back her 20 crore rupees. She will get only interest. Okay, then fine. KD equals to interest 1 minus tax divided by net proceeds or market price. Interest 1 minus tax divided by net proceeds or market price. Why they are deducting tax? Why they are deducting tax? After tax? Why? That's how I'm asking why. What, sir? Hey, తిప్పి తిప్పి అదే చెప్తున్నారా లౌడ్లీ. చెప్పు నువ్వే, నీకేముందిగా గొంతు. I'm without paying tax. Without paying tax, I'm ready to transfer that interest. Any issue? Any issue? That is the points you learned in your taxation, Nana. Interest is allowable expenditure, not allowable expenditure. Allowable expenditure. Why they give the true allowable expenditure list means simple. Interest is a burden to the company. Why? Because irrespective of profits you have to pay, na. That's why they will give a advantage. That advantage is nothing but tax benefit. Hope you guys clear? Interest 1 minus tax. You need not to pay what are the rate you fixed. You need to pay after tax, that is sufficient. That's why interest 1 minus tax. Okay, then fine. What is the NP, Nana? Net proceeds. How to calculate this net proceeds? Net proceed is the alternative name. If you know the alternative name, you can easily calculate. Sale value, sale proceeds. You are selling one document or multiple documents, na. If you take total also same answer. If you take individual also same answer. I'm just talking about one debenture. You are selling one debenture for a particular value, na. That value is nothing but net proceeds. How we calculate that net proceeds means issue price minus flotation cost. Issue price minus flotation cost. What is the issue price? I can issue at my book value. I can issue at more than book value. I can issue at less than book value. If I issue at more than book value, that is called premium. If I issue at less than book value, that is called discount. If I issued at book value, that is called par. Nana, clear, Nana? After that, what is the mean for flotation cost? Underwriting commission, yeah, simple. As per law, for debentures, what is the minimum? What is the minimum or maximum? Maximum. 2.5%. For equity shares, 5%. Sir, clear, sir? Okay, then fine. That all not required, they will give in the question paper clearly. If there is a flotation cost. Are you okay? If there is no flotation cost, net proceeds is nothing but issue price. Are you okay now? There is a no clarity about the issuer. At the time, what we need to do? Par basic assumption 100 rupees. Basic assumption 100. If there is no information regarding to the issue, but their sell, you need to take a call. You sell at what value, Nana? Book value. If they are not mentioned book value also, you need to take one number. That assumption number is 100. In the entire books, they are using 100 only. So, no sir, can I take 10? Yeah, you can take 10. Please put a assumption. I assumed there is no clarity in the question paper. I assumed face value equals to 10 rupees. But if you take 100 rupees, you need not to mention any assumption. There is a common assumption followed by all. Okay, then fine. MP represent market price. They denote with MP, not Nana. Current market price. There is no calculation for market price. If they give, consider. If they not give, please leave. If they not give market price means what information I need to consider? Net proceeds. Nana, okay? Next, redeemable debentures. Same calculation or different, Nana? Why? When it comes to irredeemable debenture, only one payment is there. What is that? Interest. Can I name it as revenue expenditure? Interest is a revenue expenditure only, na? But when come to the redeemable debenture, I am doing two payments. What are the two payments? Interest I am paying for every year as well. Capital. Now when it come to the capital, I am not paying total for every year, but I will do accounting for every year. Nana, clear, Nana? Now interest 1 minus tax is known as revenue expenditure plus repayment value minus net proceed or market price, what you take, not a problem. Based on information, there is no two values, either net proceed value or market price value, divided by n. Why divided by n means we are not calculating for total years, we are calculating for 1 year. Next, whole divided by just a selling value I said previously, but when come to this point there is a two values, selling value is there, repayment value also there. What I need to consider? Both I need to consider, that's why I am doing average. Repayment value plus net proceeds or market price divided by 2. Nana, clear Nana? That red color is known as revenue expenditure treatment, that green color is known as capital expenditure treatment. Are you okay? So this is a discussion about cost of debenture. Any doubt on this KD calculation? Sure? One more question, Nana. One more point. There is a concept of pre-tax and post-tax. If you are not considering tax advantage, that is called pre-tax. If you consider tax advantage, that is called post-tax. In entire calculation part, in entire transactions, we are using only post-tax. Sir, clear, sir? Now, another point student need to understand. They give 14% debenture. They are not provided a tax rate in the question paper. At that time, 14% pre-tax as well as post-tax. They uses 14% debenture in the question paper. In down, they provided tax rate. At that time, the 14% is known as pre-tax. After tax only, you have to consider for calculation. They will not tell in detailingly. Are you okay? Then fine. Please tell me, based on this example, these are irredeemable debenture or redeemable debenture? Redeemable or irredeemable? Why irredeemable? The clue is n, Nana. The clue is n. N number of years. Not there. That means how many days we are paying interest? Lifelong. Sir, clear, sir? Okay. Now please tell me the calculation part, Nana. Interest 1 minus tax divided by market price or net proceeds, Nana? Net proceeds. Okay, then fine. Please tell me how to calculate interest. How much percentage? On face value always. 12% on face value. Where is the face value? There is a no clue. I said already you need to take a call. What is the face value? 100 rupees. So T we already know 0.3. 30% is a expression of percentage. 0.3 is a expression of rate. Next, Nana, how to calculate net proceeds? Issue price minus flotation cost. Now issue price, please. Why 105? They are issued at 5% premium, means already face value is there. They are charging extra 5 rupees. 105 minus 0. There is no flotation cost. Okay, then fine. All values is there. Please substitute. 12. 1 minus 0.3 divided by 105. How much percentage, Rana? At the end, how much you have to pay as an interest? 8% with help of tax advantage. If there is no tax advantage, you have to pay how much, ma? 12%. Clear, na? Okay, then fine. Come to this example. 12% debenture, tax rate 30%, repayment after 5 years, issued at face value. Calculate cost of debenture. Now please decide first, redeemable or irredeemable? Redeemable or irredeemable? Redeemable. Why? N number of years there. What does the mean for n number of years? Investor, debenture holder will receive every year interest for 5 years. At the end of the 5th year, he will also receive. Nana, clear, Nana? Okay. How to calculate this, ma? Now please tell me the interest value, ra? 12% of face value, 100 only, na? Why? Because no clue in the question paper. 100 is assumption. 12 rupees. Tax rate is given already. 0.3. What I next I required? Repayment value. What about the repayment value information? They just said repayment after 5 years. There is a no clue how much they repay. Here also you need to take a call, assumption. They repaid it? Nana, clear, Nana? Okay. What next I want? One more point I need to add. Issued at 5% discount. Why? Because 100 0 you will get. Okay, no? Okay, then fine. How to calculate net proceeds, no? Issue price minus flotation cost. What about the issue price? Where is the issue information? Issued at 5% discount. How much, ma? 95 minus 0. Next I want ENDRA. Number of years. Given in the question paper? 5. So everything is there. Please substitute, tell me the answer. What, Nana? 9.64% per annum. This is a way to calculate cost of debenture KD. Any doubt on this? Sure. Next, when come to the next concept, cost of preference shares. Nothing will be changed. Presentation same as this one only, but only one thing will change. Two things will be changed. What are the two things, anyone? Instead of interest, we are putting preference dividend. Instead, we are not considering tax advantage. Preference dividend don't have a tax advantage. Nana, clear, Nana? I think in our old materials, they consider another concept for preference shares, dividend distribution tax. Dividend distribution tax. But it is abolished, I think, in 2012. There is no concept of dividend distribution tax for preference shares as per law. But books are prepared before 2012. That's why they will continue with us. In new syllabus of FM also, there is a question. Sir, clear, sir? Dividend distribution tax need to pay by a company. Sir, clear, sir? At that time, we are not doing 1 minus dividend distribution tax. We are doing 1 plus dividend distribution tax. That's a special point. That is not required for us. Are you okay? Next, ma. Cost of preference share capital denoted with KP. Here also preference shares are classified into two types. Irredeemable preference share capital, redeemable preference share capital. So irredeemable, redeemable definition will not change, Nana. ఏంటని ప్రాబ్లం? సుమంత్ నీదే. ఆడినెందుకు అడుగుతున్నావు? నన్ను అడుగు ఏదైనా ఉంటే. నీకెందుకు రాసుకొని నేను షేర్ చేస్తా దీన్ని లేదా నోట్స్ ఇచ్చేస్తా. సో వెన్ అండ్ కమ్ టు హియర్ irrelevant preference irredeemable preference share capital, redeemable preference share capital definition will be not changed. What is the irredeemable? Preference shareholder will receive only not interest, preference dividend for perpetual life. What is the redeemable? Preference shareholder will receive not only receive preference dividend for n number of years. At the end of the nth year, he also receive his preference share capital back. Are you okay? Now see, KP equals to preference dividend divided by net proceeds or market price. What about here? Preference dividend plus repayment value minus net proceeds or market price divided by n whole divided by average of repayment value and net proceeds or market price. Nana clear? Why preference dividend we are not using 1 minus tax? Preference dividend don't have a tax advantage. Hope you guys clear? One note point is there. If there is a dividend distribution tax, as per law, this concept is not there. Sir, clear, sir? KP equals to preference dividend. This dividend distribution tax need to pay by a company. It is not an advantage. It is a cost for us. 1 plus dt divided by net proceeds or market price. Sir, clear? This is a concept of cost of preference share capital. Any doubt about this cost of preference share capital? Clear now? Now our main and important discussion is KE calculation, Nana. Are you writing? I hope no example is needed for this. Sir, clear, sir? If you want example, I will create. But because number of problems is not there for this basic calculation. Only 1 or 2 problems they insert in the board book. Okay, then fine. Listen carefully. Important concept. Cost of equity share capital denoted with KE. I will pass one judgment, Nana. Tell me that is a true judgment or not. Calculation of KE is difficult than KD and KP. The statement is true or not? True or false? If it is a true, why? If it is a false, why? Oh, please tell me one by one. Asif. Tell me, yaar, not a problem. What you said is right. If no one is tells. What, Nana? CAPM. That are the different methods they will give. Even though it is difficult, we need to calculate, na? Guys, understand? Even though it is difficult, can I? If you not calculated, we can't figure out KO. Even though I passed the difficult word, we need to figure out. For that figure outing purpose, they provided 4 methods: earning approach, dividend approach, CAPM, realized yield. My point not about the methods. Why it is difficult? Because of 4 methods, huh? Because of 4 methods, huh? What, Nana? That's the point. What, Nana? Fixed untada undada. Yeah, that's a point. Tell me, Nana. Okay, what fixed, Nana? that is called base rate. That is called what, Nana? Base rate. 10% debenture, 5% debenture, 14% debenture, 11% debenture, 9% preference share capital, 8% preference share capital. The share will, security will like that only. But when come to equity share capital, when you are, if anyone are observed, 8% equity share capital, 5% equity share capital, no. First thing, there is a no proper base. In about two calculation, we used a numerator base only. Interest point of view, interest base we are used. Preference dividend point of view, preference dividend we used. When it come to here, I can't use base as a numerator. First point. Next, Nana. Next. 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 What things you are doing numerator? Earnings only, no? Interest is earning for debenture holder, preference dividend is earning for preference shareholder. When it comes to this KE, we are considering profit. Profit is fluctuating or same, Nana? Fluctuating. We can't say every year same profit. That is the second reason. Next, what we are considering denominator? What we are considering denominator? Net proceeds are market price. But when it comes to the KE, 99% we are using market prices only. It is easily available in the market. Now market price is fluctuating or constant, Nana? Because of that reason also, the word difficult is true. And moreover, important thing one is there. Anyone? Growth. What is the important thing, Nana? Growth. We are not share our grown values to anyone. We are share that grown values to whom, Nana? Only owners. If company growing means I will give that growth to whom? Debenture holder? Equity shareholder? Yes. Preference shareholder? No. So if there is a growth for the company, I will share that growth to whom, Nana? Only. Now growth is constant or increase or decreasing condition, Nana? Fluctuate. Because of all these reasons, calculation of K is difficult than KD and KP. Nana, clear, Nana? Even though they use the word difficult, they provided 4 methods to calculate KE. What are the 4 methods, Nana? Earning approach, dividend approach, CAPM. Can anyone tell me the full form for CAPM? Capital asset pricing model. Realized yield model. Nana, you can use approach model, not a problem. Concept need to be understood. Okay. Okay, then fine. When it comes to the earning approach, Nana, here we are doing in 2 ways. Without growth, with growth. Without growth and with growth. When it comes to the without growth, KE equals to E1 divided by P0. E1 divided by P0. Now that one not also have a meaning here. The one represent expected or next year or estimated. The not represent current year. Are you guys clear now? Okay. Sir, when it comes to with growth, KE equals to expected earnings divided by P0 plus growth. Are you guys clear? Now one more point I will tell here. Here, expected dividend and current dividend both are same. Are you agree? Sorry, I said dividend, not dividend, earning. Here, E represent EPS, earning per share, one share point of view. You can take total, that is called EAESH. Always here we are using one share or one debenture, one preference. Why? Because you will get same answer only. Clear now? So E represent what, Nana? EPS. Now EPS 1 equals to EPS not. Are you agree? Why? There is a no growth means 10 years back EPS, Last year EPS, this year EPS, next year EPS also what, Nana? Same amount only. Are you guys okay? But when it come to here, E1 not equals to E0. Are you agree? Why, ma? Last year 10 rupees EPS means this year more than 10 rupees. Why? Because 365 days of growth will be added to the 10 rupees. Na? Yes or no, ma? That's why when it come to with growth model, if they provides a current year EPS, you need to convert them as a E1. E1 equals to E0 1 plus growth. If you add that growth to that E0 1 happen, you will get a next year EPS. Are you guys clear now? So E represent EPS, E0 represent current EPS, E1 represent next year or expected or estimated EPS. Now P0 represent current market price. Current market price. You said one point in debenture, flotation cost means underwriting commission. For equity shares also there is a underwriting commission. If there is a underwriting commission, you have to remove from market price. Why? Because in equity shares we are selling at market prices only. Nana, clear, Nana? There is a no concept of net proceeds. We are directly deducting from where, Nana? Market price. Here also, if there is a flotation cost, you have to deduct directly from the P0. This is about earning approach, Nana. Clear? But these methods we are not using anywhere. This method we are not using anywhere. We are using maximum dividend approach only. Okay. Now here also valuation is there, ma. Here also valuation is there. Now that valuation name is value per share. It denoted with V0 or P0, not a problem. V0 or P0. Anna, clear, Nana? Now what is the first formula for KE? Expected EPS divided by P0. Forgot about the flotation cost for some time. Hope you guys clear. What is the general calculation? Expected EPS divided by P0, na? Now I want P0. Can I figure out that? How? Just shuffle the formula. Now P0 went to that side and KE come to this side. P0 equals to E1 divided by, that is a way of calculating valuation of security. What security it is? Equity security. Are you okay? Now, without growth, V0 equals to E1 divided by KE. Next, when it comes to with growth, V0 equals to, now shuffle this formula. Sometime forget about the flotation cost. Why? Because we are using amount 100 minus 5 rupees or 100 minus 2 rupees of flotation cost. Here flotation is not a matter. Now what is just KE formula? E1 divided by, I am asking about KE. KE equals to D1 divided by, E1 divided by P0 plus growth, na? Just shuffle it. What happened? V0 equals to E1 will there same divided with how it came means KE equals to E1 divided by P0 plus growth. First send this plus G this side, KE minus G, that equals to E1 divided by P0. Now send this P0 into this side. P0 equals to E1 divided by KE minus G. P0, V0 both are same only. Nana, clear, Nana? Same logics for dividend approach also. Instead of EPS, what we are using? Dividend per share, DPS. Instead of EPS, we are using just DPS. How to calculate DPS? How to calculate DPS? They will tell payout ratio. They will tell what ma? Payout ratio. If EPS is 10 rupees, they said payout ratio equal to 40%. Now what is the DPS? How much they paid? 40%. On what value? 10 rupees na? 10 into 40%, how much ma? 4. 10 rupees is known as EPS, 4 rupees is known as. What about that 6 rupees? Retained earnings or retention. Guys, clear na? Dividend approach. Sir, if you have a pro in these concepts, don't feel bored, sir. For a few people, it is a requirement. Sir, clear na? If you have a sound knowledge in this cost of capital, then choose another subject to practice. These are mandated to explain as a faculty. Okay. Next, when it comes to dividend approach, here also same logic. Without growth, with growth. Now, when it comes to the without growth, KE equals to expected DPS divided by P naught. When it comes to with growth, Nana, expected dividend divided by P naught plus growth. Hope you guys clear? Now, point you need to understand, D represent DPS, dividend per share. Are you okay? Now, DPS calculation, EPS into payout ratio over EPS into 1 minus retention ratio. In our example, how much you retained? 40% paid means 60% retention. Na? 1 minus 60%, how much? 1 minus 0.6, how much? 0.4 only. Okay? These are the basic logics we are getting in between of the problems. అక్కడ ప్రతి ప్రాబ్లం దగ్గర మనం అప్పటికప్పుడు చెప్పుకోలేం కదా మొత్తం డిస్కషన్, కాబట్టి ప్రతి పాయింట్ ఇక్కడే చెప్పేస్తున్నాం. సో మనం ఏదో ప్రాబ్లం చేసుకుంటూ వెళ్తుంటాం, అక్కడ పేఅవుట్ రేషియో కనపడిద్ది. సార్ క్లియరా సార్? ఓకే, దెన్ ఫైన్. హియర్ ఆల్సో వీఆర్ డూయింగ్ ఎ వాల్యుయేషన్. హౌ టు క్యాలిక్యులేట్ V naught రా? D1 divided by KE. Here how to calculate V naught రా? D1 divided by KE minus growth. So this is very important for us in discounted cash flow method also. Discounted cash flow method also. Are you okay? So next topic is CAPM. We will discuss tomorrow. In CAPM, we know only basic CAPM. In CAPM, in Spm&Bv, they added 2 more concepts. Expanded CAPM, build up CAPM. Do you know that? Expanded CAPM and build up CAPM. There are the new topics they added, Nana. But you know basic CAPM. RF plus beta into RM minus RF. In addition that, there are 2 topics. Expanded CAPM, build up CAPM. One problem also they provided in our workbook. Okay, I think the topics is there in your SFM. You will get more clarity in SFM also. Sir, clear sir? Okay, then fine. Thank you. I hope you understand this all concepts. Any doubt on this? See ya? Clear, Nana? Okay.